Hey everyone, my name is Ale and I have a speculative stock addiction. I can't stop buying these. I don't know what's wrong with me. I can't seem to take the hint that these are falling knives and the market absolutely hates highly speculative tech stocks right now. But I see these stocks crashing and I just think that they're great long term values at these prices. So I went ahead and I purchased yet another speculative stock to add to my portfolio. And this time it was Pubmatic, ticker symbol PUBM, who I just recently talked about actually for the first time ever on the channel in my 3 stocks on sale series. But since mentioning the stock there, it's crashed by even more since then. And this is a stock that is down so heavily at this point, well over 80% from its highs. And I went ahead and picked it up. So in today's video, I'm going to explain why it continues to crash, why I like it despite all the pessimism surrounding it, and I'll give you 3 specific reasons on why I went ahead and purchased this stock. Let's jump into it. Okay, so let's start by pulling up the stock chart. And by the way, when I first made my video on this stock, I told you that I was still a bit on the fence about it. I wasn't sure if I would be buying it yet unless it continued to fall more, but sure enough, that's exactly what happened. Now, at that time when I released the video on this stock, it was trading at almost $17 a share after having already crashed by close to 80% from its highs. However, today, this is on Thursday night that I took this screenshot here and that I'm now deciding to buy the stock. Well, it's now fallen by even more to just the $14 range after losing another 11% of its value over the past week alone. And at these levels, I just think that this is a solid buy as a speculative tech stock. Now, why did all of the crash happen though? Well, just to give you a little bit of a background on the company, this is a very fast growing digital advertisement technology company that basically helps companies advertise on the various platforms of publishers. So for example, say you have a website or maybe you have an app or some kind of social media platform, whatever the case is, Pubmatic will help you connect with advertisers, and then those advertisers can use Pubmatic software and solutions to advertise themselves more effectively as well. So the publishers will make more money by being able to connect with more advertisers, while advertisers make more money on their investment because of the increased efficiency. So it's basically like a win-win, and Pubmatic is able to offer the softwares and services that are needed by both sides in order to make all of this happen. And so they're able to collect fees on all of that, and it basically ends up being a win-win-win. And because of the giant growth in digital advertising, especially following the pandemic where digital use of practically everything has gone up, well, Pubmatic was able to see explosive growth and demand for their services. In fact, new projections for digital ad spending have risen by literally hundreds of millions of dollars because of it, and Pubmatic has been able to land some of the largest clients imaginable with notable publishers like Microsoft, ABC, DraftKings, Univision, WebMD, Forbes, eBay. There's even huge gaming companies like Activision Blizzard, Zynga, and Unity, and the list goes on and on. They also have some of the largest ad agencies in the world, including individual advertisers like Procter & Gamble and Anheuser-Busch, which includes hundreds of some of the most popular brands in the world. Meanwhile, Pub has also been able to grow their sales by giant amounts over recent years, with a whopping 31% growth in 2020 and over 50% growth last year. However, that momentum seems to be slowing down as their growth falls to just the 20% range these next couple of years, which is why the stock has been getting destroyed. This is in part due to the economy opening back up, lockdowns being lifted, and people going back outside, which means that the growth in phone and computer usage should slow down a little along with it, which in turn means less growth in digital advertising. However, I think the bigger issue is the fact that we are facing a possible recession, and that's causing advertisers to slow down their spending. See, first quarter GDP was a surprising drop of about 2%, and if this quarter is the same, then it'll be a technical recession. But even if it's not, economists are already predicting that next year will have a 40% chance of a recession as well. Obviously, this would all be very terrible for advertising spend because companies around the world are going to tighten their budgets during an economic downturn. However, there are 3 key reasons why I feel that all of this is being overblown in the case of Pubmatic, and why I feel that the stock is a solid buy right now. Now, reason number one is the long term growth potential of Pubmatic. Even with the rising risk of recession, projections for advertising as a whole are still through the roof because society in general is becoming more digital over time. Over the past year, Pubmatic only did a couple hundred million in sales, yet when looking at the advertising market, just programmatic advertising in the United States alone, which is their specialty, was already worth over $100 billion with a B last year and is expected to reach nearly $150 billion by next year as well. Globally, that number gets even more astounding at over $400 billion last year on growth of over 30%, and it's expected to surpass $500 billion by next year as well. Again, compare that to Pubmatic, who only did a couple hundred million with an M. Now, in other words, what we're looking at here is nothing but gigantic growth to be had for such a small company like Pubmatic that is operating in such a massive market, especially internationally, since the majority of their customers are still in the US at close to 60%. So there's lots of international expansion to be had as well. Meanwhile, though, Pub already has close to 50,000 companies using their products, and yet they only have about 1% of the market. So 1% market share, closer to 2%. But what we're really seeing here is a highly fragmented market that is likely to consolidate during weak economic times, but is likely to continue growing anyway, and as Pubmatic gets larger themselves, they'll likely become a more trusted name in the space, which should help them grow even bigger. At least that's my prediction, or that's my hope. And we're already seeing some of this happen already, as Pubmatic was able to more than double their profits last year, which brings me to reason number two, and that's that they're actually profitable on a consistent basis. I mean, I really look at this as a speculative tech stock because of how small and young they are. They barely IPO'd like in 2020, and it was like at the end of 2020, so it was like 2021. And you also look at how fast they're growing, but the crazy thing is that they're already profitable. That just goes to show how incredibly well run they are with strong margins, because if you take their biggest competitor, for example, in Magnite, who is more than twice the size of Pubmatic by revenue, well, they're not even profitable. They lose millions of dollars every year, and their operating margin is negative 12%, while Pubmatic is massively higher at positive 24%, which leaves me with the third and final reason. That's the valuation, because this company is way too good and has way too much future potential to be trading as low as it is, especially if I'm thinking, long term. For being a high growth tech stock, you're looking at a market cap of less than $1 billion with an even smaller enterprise value because of the strong balance sheet. You're also looking at a trailing PE of only around 17 and a PS of only around 4. For a high growth company that's already profitable, that's actually pretty darn cheap. Now, you'll notice that their forward PE is actually higher than the trailing, which is a telltale sign that they're expected to struggle a bit next year with profits, which is likely due to the market slowing down. But it's also because the company itself needs to have a little bit of a small correction after having an explosive 2020 and 2021. Long term, though, I still think that the business is well intact, and if you compare these numbers to what they were just a year ago, you'll find that they were like 4 times higher, with a forward PE of over 120 and a PS of almost 12. Many analysts seem to agree with me too that the stock is cheap right now, since out of the 10 analysts on Yahoo Finance, the lowest bear case targets are still above 20, the average is closer to 30, and the highest is as much as 40. I'm not saying that there isn't significant risk here. There's a reason why I still consider this to be a highly speculative stock that should be purchased and treated as a long-term gamble more so than a sure bet investment. But as far as spec stocks go, I mean, this is one of the absolute best options out there. I mean, they're even profitable, and I know a lot of people that constantly tell me about how much they love a certain speculative stock, and those, most of the time, those are far riskier, and most of the time they're not even profitable companies. So I feel that Pubmatic is actually a pretty good opportunity here, and the reason why I do still consider it risky is because they are a fairly younger company, so the future is not as certain, and of course there's the economic issues going on, and that's my biggest concern, is the economy. But I still think that what we're dealing with here is a addressable market for Pubmatic that is still going to get larger even with the weakening economy, and Pubmatic is just playing a very small role in that right now, so they have a ton of room to continue growing, and I think over the long term that will help them be successful. So I went ahead and I picked up the stock at around $15 a share, and I feel pretty good about it. Now, it's way less than 1% of my portfolio, so it's a tiny little position for me, but that's how I always treat new spec stocks. I always go in very tiny, and even longer spec stocks too. I always keep those positions very small, but especially with a brand new one, I go in very tiny, and that way if the stock continues to crash, I can easily double, triple, or even quadruple my position and dramatically lower my cost basis if it continues to crash. So I went in very light on this one, very small position, but I think they have a lot of long-term potential, and I'm excited to hold this one for the next, 5 to 10 years or more and see where it takes me. But anyway, those are just my thoughts. That's how I feel about this stock. Doesn't mean you should buy it. Do your own research, make your own decisions, but let me know down below, how do you feel about this stock? Do you agree with anything I said? Do you think I might be on the right track, or do you disagree? Do you think I'm making a mistake here? I'd love to hear your thoughts. It might even influence me a bit, so I'd love to hear those thoughts. I'll try to respond to them. And if there's any stocks that you're invested in, whether it's Pubmatic or anything else, let me know down below, and maybe I'll make a future video on that one. But thank you so much for watching, and I will catch you in the next video. Hope you're all doing well. Take care. Bye-bye.